Hi, good morning this morning. This is Malan KB and this is video 13 of this course Forex Data Kit. And we are still on technical analysis and today we are going to talk about demand and supply. We've talked about support and resistance and now demand and supply. So just like the word is demand where there is a lot of demand and supply is where there is a lot of supply. Demand is for um, buy and supply is for sell. So where there is demand is where people are putting their buy buy limit, buy stop, sell stop, and everything. People are waiting there for market to come and pick their demand and go up, while supply is where people are waiting at the top so that market will come and pick their supply and comes down. So now let me just give you a perfect example. Now this is a perfect example. This zone is a perfect example of a demand because there is a very big what is it called, fair value gap or imbalance. I've explained about this. So people are expecting market to come and cover this fair value gap entirely before market continue moving up. So a lot of people are here waiting for the market to come down and tap this zone and pick their buy limit to start moving up. So there is a lot of demand for buying gold here because people are expecting the price of gold to come down to this place so that they will buy and the price will keep going up. Now, since people are knowing there are a lot of people waiting here to come and buy here, then there are a lot of people that are putting their sell limit and executing their sell here because they also expect market to come and cover this place. So now here should be your demand and here should be your supply. Like I said, I cannot teach you everything because this is just the basics. So you can also go and watch more videos and learn more about, because there's a lot to say about demand and supply. This is another zone. This is another zone. Now, people might put a lot of buy limit, buy stop, and everything here because there are gaps that market left. If you check maybe higher time frame, you might be able to see a very big fair value gap here. But still, we have a fair value gap here that market is supposed to come and fill. So now people might wait here also. If the market breaks this zone and tap this place, it will pick their orders. The same thing in this zone because of this very big space. Market will tap this and move up. So the same thing for sell limit. If there's any zone on top, people are putting their sell limit and everything for the market to tap and come down and pick it. Now that is just a brief explanation about demand and supply. Now let's talk about liquidity. I think the next thing is liquidity. Okay, so when we say liquidity, we mean money. Where there is a lot of money, there's always liquidity. Where people pump a lot of money, there's a liquidity. Now, let me use this demand zone and explain liquidity for you. Now, we might call this weeks a liquidity. Now, because market understand that people are waiting for this zone so that they will pick their buy and the market move up. Market might decide to come and sweep because definitely people will put their stop loss just beyond this support zone. They'll put their stop loss down here because they are not expecting market to go out of this zone to hit their stop loss. So they'll put their stop loss somewhere around here. Somewhere around here, that's 35.43. They'll put their stop loss around here so that market will not hit the stop loss and market will go and pay them. But the market might decide to come and hit the stop loss, move downward and comes to this zone before market move up. That is liquidity or liquidity sweep. Market comes and clear everybody, remove everybody out, chop everybody's money and move up. So that's what we mean by liquidity. There's a very clear one here that make a lot of people lose money. You get? So the market is not supposed to go beyond this zone. The market is not, because of these wicks. Market has consolidated here, so there's a lot of demand in this zone. So once market tap here, it's supposed to go up. But then the market decided to go beyond and clear everybody here. Remove everybody as stop loss. I know someone that lose, I think, over 290 million just because of these weeks. He was catching buy and the market was selling. He was catching buy and the market was selling until it tapped this zone and remove him. If you check higher time frame, there is a wick here. If you check like 1 hour or 4 hour candles, you will see a very big wick here. So this zone, market is not supposed to break this zone. If the market breaks this zone, it must reach this wick you are seeing. So, but then the market decided to remove everybody from this zone. Everyone that put his stop loss around this zone lost their money. I told you I know someone that lost 290 something million here, but he recovered everything after the market touches this zone. He used 50, 70 lot size, and boom, the market started going. Then he recovered like 370 something million and closed the market. So that is liquidity. Market always come and sweep liquidity. Now, like market might decide to come and sweep this liquidity. Market might decide to come down until it reaches this zone, because people might put their stop loss just below this wick, and the market might decide to sweep everything, go beyond it, remove them with their stop losses and go up. So that's what the market does. So as a trader, you need to understand this concept and know where to put your stop loss and know what you are risking. So that is liquidity sweep and liquidity. So now whenever market comes down, there is high tendency that market might come and sweep this liquidity or might reach this zone. So whenever you put your stop loss just below this and market breaks it, then you are in trouble. You lose a lot of money. So, and I told you in the beginning, the market is like it's very risky. It's very risky. Now the next thing is trend line. Now let me show you how we draw trend line. When market is moving, I think I've done this right. I've done this trend line of a thing. I just didn't show you how it goes, right? So let me draw this path tool first and show you how we draw trend line. That's to understand where to pick your buy and sell and the rest. Okay. Now this is a trend line. You just come and pick a trend line. Look at it here, and you draw it from here upward. So to validate your trend line, it has to have like 3 touches. Now your expectation is whenever market, let me draw. Now you are not expecting market to come and break this trend line downward. You are expecting market to come and touch this trend line and move up again, touch this trend line and move up again, touch this trend line and move up again. Whenever market breaks this trend line, then it will hit your stop loss and the market might change direction. The market might be going in a downtrend. So this is trend line. You just draw it and make sure it touches 3 of your lower highs that the market has created. 1, 2, 3, at least 3. It might be more than that, but at least 3. And you can draw this in whatsoever time frame you like. So that's trend line. Whenever market breaks that trend line and it hits your stop loss, then probably the market has changed direction. The market might be going in an uptrend. So let me draw it here in the chart. Sorry. You see, the market has been touching the line. The market has been touching the line several times here, creating the lower highs. You see, whenever market is going up, it comes back and touches the line until the market breaks the line here. That means we completely had a change of character. The market comes down. You see, so once you draw your line from here to here and the market is in this zone, that is 1, 2, and 3. So you draw your trend line touching the lines. So market will keep moving up, either touching the line or rejecting the line and going up. Either touching the line and rejecting the line and going up. Once market breaks your line, it will either hit your stop loss or it will take you out, or it will hit your stop loss and keep going down, or it will hit your stop loss and keep moving up, which we call fake out. I think that's the next thing in our, okay, yes, it's breakout. Okay, so now this is what we call breakout. Let's talk about breakout. If a candle closes beyond the line with its body not weak, it's automatically breakout. That means it broken the structure. But if market break the line and suck up the candle with leaving a wick, I told you what wick is. Leaving a wick, that is not a breakout. Let me give you example with this trend, this support and resistance. Now this resistance, this candle went up and break this line. So I told you whenever the market breaks the line, it will keep going up. But if it touches the line and come back, that's what we were expecting. But this candle, it breaks the line, then suck down the candle and close with a wick. So it left a wick. This is not a breakout. If market broke, if it closes with the body of the candle, especially 15-minute candle, that is a breakout. For example, and it has to be at least 10 pips away. So this one you might not call it a breakout. You wait for confirmation. You cannot say this market has broken out and just start going for looking for a buy. No, you wait for the next candle to confirm to you that the market has broken this line. That's one. Secondly, you wait for retest. You wait for the market to go up a bit and come back to create that higher low before you take your buy in the zone of that higher low. Now the market started moving. It moved to this point before market come back here with this green candle. That is, it comes back for a retest. So this is where you pick your buy. And once market comes here, you are expecting a retest. It will come back definitely before it will keep moving up. So that is a breakout. Now let me show you another one. Now when market comes and touches this line, it went back, but the next candle it comes back and closes with the whole body. So you can call this one a breakout. But then after the breakout, it went and sweep a liquidity and comes back. Then this one also that comes back, it closes inside the candle with the body, not with a wick. Since it happened, that means you are expecting the market to continue going up. But then you will not enter your buy here because definitely market will come back for a retest. So you wait for the market to go up, then come back for a retest. You see, it has come back and retest this area. Then here is where you catch your buy and move up. You don't just catch the buy once the market touches the line. If the market breaks out, you are in trouble. So you wait. If the market touches the line and did not break out, that means the market is coming back to this your support area. If the market closes with the candle, then you wait for the retest. It will go up, come back and retest before going up. So that is when the market comes back for retest, that's where you catch your buy. When market breaks down and closes with the body or below the line, you wait for what is it called, you wait for retest. It will go back a bit before going down. So that is breakout. That is breakout. Then the next thing is fake out, I think. Okay, yes, fake out is just like let me show you. Just when market broken out a support or a resistance zone, but not completely, that is, if it is a fake out, it did not break the line. Whenever market did not close with the body, it will go and leave a very long wick and come back. That is a fake out. I'm trying to look for a very good candle that will show you a fake out. Fake out. Okay, just look at this red candle. Look at this red candle. The candle wanted to close inside the candle, inside the line. That is, it want to close with the body, but it came back like as if it's going down. Now, if you did not wait for that retest or wait for that confirmation, everyone will think since the candle is coming down, so the market has touches our resistance zone and it's going to come back to our support. Everyone will jump in and enter a sell and you will be in trouble. That is why I said you wait. Once the confirmation is being done that the market has broken down, still you wait for the market to go down a bit and come back for a retest, then you catch your sell. But this one wanted to show you that it's going down, but it's later changed to a buy and the market started buying. So that is a fake out. A fake out is just like it's giving you a fake breakout. That is a fake out. So I think I've explained so much on breakout and fake out. So we meet in the next video.